What's up, everyone? Andy here for tradingadventures.com with today's look at the weekly charts. And this is where we take a step back, consider the bigger time frames, the bigger picture, and look through the charts with an open mind, curiosity, a willingness to interpret the message that the market is sending without any preconceived notions or thoughts about where we think things should go, where prices should go. Uh, just want to be completely blank and take an objective look at the price action and see what's going on. Last week, we started out here with a SPY, noting that it broke over a bit of a trend line here and was looked promising. This week, it's given that action back and then some, but it's could be testing an important level here. This is the confluence of the 4 and 10 week moving averages. The 40 week is still down here, now above this recent high from back in the beginning of the year. And is this a failed breakout? Is this a failed move that will lead to fast action lower? Or is this simply a retest of this key area here, these moving averages and this trend line? And while we're at it, let's take a minute to consider hand-drawn trend lines and the utility there and the potential fallacy or ambiguity. Just because we draw a trend line in where we think makes sense does not mean that it will or should be respected by the price action. The market doesn't owe us anything. Price action does not have to respect anything we think we see on the charts. It's always good to remember that. I always try to point out that anything that I draw on these charts is simply, it's like taking notes. It's like jotting down ideas. It's a level of interest. It's a potential pattern. It's a potential breakout. It's nothing more than that. Maybe it becomes relevant, maybe it doesn't. So as we look at these things, the more important aspect is the fact that we saw some decently sustained selling this week with a red candle back down into this area. It's not huge, it's not catastrophic. The market still looks healthy beneath the surface. We've got RSI in the 60s. We've got volume just a little below the 20 period average and light for the summertime, which is totally normal. So that's the situation on the SPX and the SPY. And we'll see what happens. We want to be looking to find out, does this level hold? Let's just call this 743s on SPY. Does this hold and produce buyers in the coming week or two? Or do we take a trip lower if this area is broken? I think there's a good likelihood that we eventually come back down to this VWAP anchored from the April or late March low. We saw that once before. And if I had to assign a coin flip probability, to me, I think it still looks like there's a slightly higher chance that this comes back up, that this is just a rest after the breakout, as people are still not entirely bullish and confident in the markets and higher price action. But if I give that a higher probability, it's not by a whole lot. And for whatever that's worth, that's completely a guess. Some just thoughts as I take what the market's telling me and try to form an opinion of what is possible and not even so much about what's more likely. Qs back down to this level seen a few weeks ago and this anchor off of those late March lows, and got a bit of a bounce yesterday. I think most of that came in yesterday, Friday's action. But again, it's digesting, it's chopping around, and opened up some action lower, which we saw find at least some temporary support here in the 684, 685 level on the Qs. These previous lows were important until they weren't. And now we went down and broke below them. So now we want to watch 684, 685. Does that hold? If it doesn't, then the next reference points we have are the 40-week moving average and this Fibonacci extension level, which, again, we drew this one in months ago, and it turned out to have some significance. Prices repeatedly tried to get above it and couldn't. So now the next one's up here. We haven't visited that one yet. Does it become important? Does it matter? Do we ever get to it? Does it find resistance? We will only know after the fact. Meanwhile, the Dow 30 DIA is continuing very strong. Yes, it dipped below the 4-week moving average here, but not by much. It took out last week's lows and the week before slightly, where it found a little bit of short-term support. And really not a whole lot to be concerned about here, as it was very extended. Look at this run for, 12 or 15 weeks, something like that. RSI got a little overheated. Now it's resting. So just some, so far, healthy digestion there in the Dow stocks, and the small caps very much the same. A very strong run over the last couple of months or few months, and now it's back testing the rising 10-week moving average. The 4-week has rounded over a little bit. RSI is healthy and staying very close to the upper end of the range. And if this level doesn't hold, we've got this extension level here, which maybe was a little relevant on these weeks. It's not precise, but if we lose this 290 area, then we'll be looking at this anchor coming from, once again, the end of March lows. So there's your reference points. That's about 280, by the way, just about a little over 280 on the small cap. So there's the big four market index ETFs. Bitcoin still hanging in there. Smaller candles here after this reversal. The 4-week is actually started to rise slightly, and we still have pretty significant area here. And let's just go ahead and draw this in. Let's make a note for ourselves to watch 60, what is this? 65, call it 65.5. This is an area that has had some relevance back in this sequence. And then once again, for these few weeks, and now we're back to it. Is it going to be foreboding? Is it a level that's unbreakable to the upside for Bitcoin? We'll have to wait and see, but that's something to monitor. If the price action can get and stay above 65.5, that tells us that something is changing relative to the last 4, 5, 6 weeks. It's not something that it's been able to do for quite a while. So if it does that, that's a signal that says, hey, Bitcoin is acting a little differently in this time frame. Then what can we watch next? Maybe this anchor becomes important. Maybe not. Maybe this one has been important several times. So that's a level to watch, as it's right here with the declining 40-week moving average. Maybe we can draw one in off of this high and see, is this 60, call it 68,000? Will that be important? Those are the kinds of possibilities we'll watch for without trying to predict, without trying to guess with any certainty where price action will go. We just follow the sequence and listen to what it's telling us. Let me back up here just a second and note, I think we drew this in last week. We do have a little bit of a positive divergence here on the RSI. That is a potentially favorable scenario, as price made new lows and the RSI did not. So Bitcoin is still showing some early signs of remedy and stability there. Meanwhile, the dollar, almost opposite action, but not exactly. 4 weeks here digesting this breakout move over this notation, this noted area, shaded area, which we've been watching for quite some time. And we can see, does it want to hold, let's call this 100.22 down to 99.92 here on the dollar? Can it hold this area and continue back to the upside? Or does it want to chop around and potentially go lower? Volatility got a little bit of an uptick this week, but not running away, and still very low and mostly stable down here in the mid to upper teens. And the rest of the world continued down and hit this anchor off of the late March. And again, a note about precision. We don't care exactly what this level is if you zoom in on different time frames, but the number's going to be a little different because the math is just a little different. If we draw it off of this low, and typically, by the way, I typically try to put the anchor on the candle with the lowest close or the highest close. So, but again, it doesn't change the information that much. We're not concerned about the precision, but the price action tells us it's below the short-term moving averages. It's below this area here around 75, and found a bounce, at least in the intermediate, from these recent lows and this anchor from back here. So maybe the rest of the world finds a little stability here as well. China continued higher, and it found some resistance. Once again, polarity in action. This was support. This was congestion. And then maybe some resistance. Now it's back to that level. 34.80s. Can it get above this level and open the door to some cleaner air up into this area and the declining 40-week moving average? Bonds, more polarity, previous support, a little bit of a chop. Maybe this is resistance now. We'll find out. We've got the moving averages coming down. So just looking at the price action and seeing what areas above and below could become important or relevant in the weeks ahead. Treasury bonds still in an overall downtrend, and that's another key distinction there. It's just what's the bigger picture here. That's the point of these charts in the first place. We're drilling in here and getting a little specific on the recent week's action, but overall, we're in a downtrend. It's below the moving averages, which are going lower. It's making newer lows relative to the last few weeks, not quite newer lows relative to the big picture, but overall, we've got lower lows and lower highs below the declining moving averages. That is the definition of a downtrend. Same thing on TLT, high yield bonds. Same thing, although more choppy and tight. Here's another trend line that I didn't think to draw in last week. Not that it matters. We can operate fine without it. But this area right here, 79.70s to 79.80s and on up into 79.90, that has been a level of supply for the last couple of weeks. Does it continue, and do we see a further degradation or downside here in the high yield? If not, if it wants to go higher, it's going to have to take this out first. It's going to need to prove to us that it can get above and stay above this level for things to change, for the situation to begin to look different. So GSG bounce there. We'll go straight to crude, and look where it stopped for the week. Right back at this open, the open of this big red candle back on June 15th, right at the anchored VWAP from the local low back in the middle of December. And we've got the declining 2010 period moving average coming down right overhead. So it's a big move for crude, but the real test could be 82 to 83. What can it do next week in this area? Gold, still trying to find support, building a bit of a pyramid or whatever shape you want to assign this when you look at it. It could be anything. We can probably go ahead and take this off of there. That's not really relevant right now. But what is the found support back here at the rising 10-week moving average. And now it's maybe finding a little support in this level again, but the difference is the moving averages are declining overhead. Lower lows, lower highs, below declining moving averages. So the risk is still to the downside for gold, while keeping in mind that this level just below 4,000 has been and continues so far to act as support. Equal weight S&P still holding up just fine. Equal weight NASDAQ chopping around, more consolidation, but certainly not broken, although it is now below both of the moving averages. That's a somewhat drastic reversal from last week's action, but we've got this previous low in here. We'll see what happens with the equal weight if you even like to watch those. Growth, very similar to the NASDAQ, while value is continuing on in a very strong, very orderly uptrend, making new highs on RSI, still climbing the rising 4-week moving average. No signs of slowing down yet, although volume is pretty light. That's not a make or break situation. That's just a reference. And what happens with the value sector going forward, we don't know, but these are our reference points down below. If it's going to break down and give back some of this move, first thing it has to do is close below the rising 4-week moving average. Then we see how it does at the 10-week. Then maybe this anchor comes into play, so on and so forth. Consumer discretionary, whoops, a little bit of a breakout here that didn't hold, and now we continue below the declining moving averages. They were rising, they flattened out, they're chopping and crossing back and forth, and now they're both declining again, and it just can't get over this level through here. So that's what we want to see for more upside in discretionary stocks. Discretionaries, as a reminder, can be a signal that risk appetite is strong and improving, or in this instance, more accurately, is it diminishing? Are people less willing to take risk in the more growth-oriented areas, the more speculative aggressive areas of the market right now. That seems to be what we're seeing. And in the meantime, staples, potentially a more defensive area. Big range here, but the open and close not that different. But it is still higher highs and higher lows above the moving averages. So there's some discrepancy there in discretionary versus staples. If we look at growth and value together against each other, we can see that exemplified once again. We've got a strong favor towards value. We've got a somewhat stronger favor towards staples, although it has held this area. This was supply. Now this is demand, otherwise known as resistance and support. Can it continue along, or do we see this level give way and strength continue in direction of the staples? High beta versus low risk. No surprise there. Things were buying power rotated more towards lower volatility and away from high beta this week. So let's switch gears for just a minute and see what's going on under the surface. This is the percentage of S&P 500 stocks above a 50 and 200-day moving averages. These are the symbols. You can type these in if you're on TradingView. You can see the symbols here in the watermark if you want to judge this for yourself. I like to keep the chart on a 3-panel view so I can look at it all together. And the number of stocks in an uptrend, as defined by price action above these moving averages, continues to be healthy. In fact, the percentage above a 200-day average continued to increase this week, while the 50-day took a little bit of a rest. Nothing concerning, nothing broken here, still in the stronger upper half. And if we go over to the bullish percent charts, which we haven't checked on in a couple of weeks, we can see that participation here is still plenty strong. It's making new highs. It is rising here overall, and we see about 60% of stocks in the S&P 500 are on a point and figure buy signal right now. If we look at the NASDAQ 100, not quite as strong, which matches up pretty well with the price chart. It's declining here, but mostly choppy. There's no real direction, which is what we've seen for really all year back into 2025. This little 26 here that you can't hardly see is the beginning of the year. Reminder that point and figure charts don't care about time. They only reverse with the calculation. So the time reference on here is just that. It's a reference. It's not part of the calculation at all, but it's useful because we can see that since this peak back in, well, the 26 is here. The numbers are, here's 5, 6, and 7. So this is May, June, and July of last year. That was the peak for this calculation, and then since then it declined and it's just chopping around. So it's still, well, it's just below the 50% level. It's not quite, much like RSI. If it was below 30 or above 70, that's, or some people like to use 80 and 20, that's when we really have a potentially actionable signal, something that gives us some useful context. Right now, it's just chopping around on either side of 50% and not telling us anything overwhelming. It's not shouting any message at us very much. And so finally, if we look at the NYSE, similar action here. These really washed out levels are potentially useful information. Just to, when the bullish percents are down this low, it just means that everything is come down so much, so many stocks are on a point and figure buy signal that there's not many left to make that reversal. And so maybe the move is getting a little overdone to the downside. We haven't seen an upside washout in anything on this chart for quite some time. And overall, it's still just chopping around in the middle on either side of the 50% mark. And so that's kind of why I skipped these the last couple of weeks, is because they're just not really telling us much. The S&P a little bit is still slightly increasing, and that's good to see. And under the surface for the others, it's just the participation is middling. It's not going anywhere. It's healthy. It's not breaking down. It's not putting in new lows, but just not a lot of information there that is useful right now. So back to our sector and theme charts. We'll go now to look at the semiconductor index. Could not stay above the declining 4-week and the flat 10-week moving average here. That was a level that it just couldn't beat. It tried and it came back down, and notice where it closed. Yeah, Friday's action, again, a bit of a bounce here from kind of a washed out situation, but closing right here on this VWAP anchored to this bit of a dip here right before the breakout move. So that was some intermediate or short-term support. We'll see what it does next week. Our next reference levels are really down in here, a good ways below. I'm not calling for it to go down there, but when we look at the price action, we don't have much of a reference until down here at 430, which is about 17.5% below this week's close, and then the rising 40-week moving average a little over 23%. So that's just something to be aware of. Who knows if it happens, but the semiconductors have been consolidating this move, which is important to remember as well. This is astronomical. I mean, this breakout from here to here, it's 90%, 92% in 12 weeks. So that's just an astonishing move. To see it give some of that back and rest a little bit is not at all, shouldn't be surprising, and it shouldn't even really be that concerning, because this is still in a very strong uptrend up to this point. XBI, similar consolidation here. We saw this bit of a topping candle last week. It got some follow through to the downside, but the buyers weren't far away. They didn't cut tail and run away altogether, because they jumped in here and bought it all the way back up into this level. So just more healthy consolidation there in the biotech sector. Software continues to be just an absolute mess. I've got too many things drawn on this chart. The price action is choppy and erratic and going all over the place and finding absolutely no direction as people and traders consider the possibilities. It's just like, do we want to take it down? Nope. Do we want to buy it up? Nope. Let's just hold right here and wait for the move to develop. And so that's what's going on with software. Mag 7 names. This was not predictive. This was not incredibly prescient, but notice that these previous highs were the high again for this week. So still trying to move higher, just couldn't get the follow through and sustain the move. It's still above the moving averages. The 10-week is coming down a little bit while the others are rising slightly. So Mag 7 names still trying to improve. We'll look at those individually here in a few minutes. Financial stocks, very strong, can't get above this previous high and stay there. They are above the previous closing high, and they made another new weekly closing high here. But you notice the little trip up here got sold off, and so this continues to be a level that has my interest. We want to see, can the financials keep it up and continue along, while energy looks very much like crude oil. It's back above the moving averages, but let's just draw in another reference point here. This is a strong consolidating range, a bit wide albeit, but this is what's going on in energy. As the profit takers came in back here, we saw a potential resolution in Iran that has been back and forth, and this is just basically followed the headlines. It's just all over the place, but it still looks like consolidating action within this upward move. If this breaks out to the upside and continues, yet we don't want to think about that, because the catalyst behind that could be further uncertainty in the oil markets and the energy markets. But from a price action standpoint, they'll be very bullish if it can get up in here and maybe make a few candles in this area and then take out this high. Again, not a prediction. It's never a prediction. Just looking at what is the potentially higher probability outcome. And so far, 2 big weeks up, it's probably a 50-50, because we've seen this in the area and be resistance several times. But if that breaks, then that tells us that things are potentially changing. If it comes back down in here, if we draw these out a little further and price stays within this compression, would not be a bit surprised. So on to the Mag 7 names individually. Apple, very strong week, very strong 3 weeks actually, and making very prominent new highs there on the weekly close of Apple. Amazon tried to get moving and couldn't stay. It's back between the moving averages, and the bullish participants are not totally confident in that one yet, as profit taking came about. Google, I think there was some news around Google. Regardless of the supposed reason, the price action is a reversal. It could not or at least a reversal of the intermediate or daily attempts higher. It's below the moving averages. It hasn't made a lower low yet, but this has potential to turn into a lower high. So I think we need to be on the watch for further downside in Google. We can draw in a note, a sketch, a reference point here at around 340 or just below. It was resistance. It didn't matter a whole lot here. Some short-term support. Does it hold again? We'll see what happens. Meta still can't do it. This is the longer-term trend line here. Tried to get above last week and got put back below very quickly. But this candle is within the higher upper range of last week's big moves. So a bit of a rest there, and then continuation higher is not out of the question. Microsoft, broken, choppy, just incredibly messy, like the software sector overall. NVIDIA, still going nowhere. We've got flat to slightly declining moving averages. We've got an inside week. We've got no resolution on NVIDIA yet, even though we saw this nice reversal last week. It didn't run away. It really needed to get above this and maybe put in a second week higher and test this, and that didn't happen as the AI trade, the semiconductor trade, is still under a lot of scrutiny. And Tesla just still pretty ugly here. It can't get any sustained action higher. It has been this anchor from the highs, and the moving averages just weighing incredibly heavy on price action there in Tesla. And of course, if we're going to look at that, we probably should look at SpaceX and see that IPO buyers, just unless they were quick traders and took advantage of this move, which a lot of people did, no doubt, but IPO buyers probably feeling pretty stuck right now, as there is not much positive happening for SpaceX on this chart. So what does it all mean? The rotation is still the most prominent underlying force. We've got areas of strength. We've got areas of incredible weakness. We've got choppiness. We've got messy charts. We've got strong charts. We've got some breakouts. We've got some breakouts that have come back in to reach those breakout levels. It's a messy market right now. It's not broken. It's not incredibly bearish, in my opinion. It's just a bit messy. It continues to frustrate traders. There's a lot of moves aren't giving the follow through that they did back through this period, and it's completely normal and completely natural. In Alphatrends, Brian and I come up with the market reviews and potential setups throughout these last weeks. It's been less. It's been fewer. It's a time to not try to press too much, as moves have been, as I said, we haven't gotten the follow through, broad-based follow through. There's still been some very nice trades to be had in individual themes and names, but not as many. And sometimes the moves don't last as long. So that is the message that the market is sending. Just don't try to do too much. Take it slow. Focus on the absolute best setups and wait for conditions to improve overall. And that's what we'll do until it changes. So we've got World Cup finishing up this weekend, and it's a couple more football games to watch, one today and one tomorrow. And continue to watch the price action as the markets open back up Sunday evening, and go through the lists and try to find those really nice setups if and when they show up. In the meantime, just watch the charts, scroll through the charts, do your own homework, and notice what you see. Keep an open mind. Listen to and try to hone in on the message the market is sending you. Don't impose your opinion or your preconceived notions about what absolutely is or isn't going to happen, because that is often a foolish endeavor. So we'll see what the price does. We'll look at the message and adapt along the way. You guys have a great rest of your weekend.